Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It is Tuesday, the 14th of August, 2007, and we had another down day today. Shouldn't come as a surprise. We're in a downtrend. News and surprises tend to follow the direction of a trend. You've got a declining 50-day moving average. Below that, you've got a declining 20-day moving average and a declining 10-day moving average. That indicates to me the short-term, intermediate, and longer-term trends on the daily time frame are down. Now, we've been struggling back and forth with this 200-day moving average. Today we broke down through that once again and closed right at the lows of the day. We saw another increase in volume on a downside day. And the more times it closes below this 200-day moving average, the more likely it is that bigger money is looking at this thing and saying, this market's in real serious trouble. We've already been seeing that for the last couple of weeks, but this 200-day moving average kind of acts as a beacon, as a place of last hope for the bulls to hold on to. And with it breaking below there and holding below that level, it's starting to look a lot like the IWM. You can see that there's sellers at that 200-day moving average in the IWM. It's rallied up there twice, almost three times in the last 5 or 6 sessions, and each time has been met with selling. Now we're starting to see that same type of setup in the S&P 500, and that's not a good sign for the bulls at all. So have to be very defensive in this market. I've been saying that we have to remain highly suspicious of any rally. We're in a downtrend. If you're still long, I don't know what you're waiting for to lighten up, but this market continues to be in serious trouble and continues to broadcast that there's probably a lot more bad news coming. We saw today another mortgage company, this TMA. It closed, last trade was at 761, but if you can see from this 2-minute time frame, they halted the stock at with about 28 minutes to go. That's also when we saw more selling here in the S&P 500. And that's not the S&P 500. There's the S&P 500, and that's really when we took out that 143 level that I thought wasn't so important here the last few days, few weeks. We are now below the levels from last Friday when the Federal Reserve came into the market and provided liquidity into the credit market, and that was a lot, I think, largely viewed by people as, first of all, it was something, it was very confusing for most people what they did, but a lot of people, that gave them confidence that the Federal Reserve was standing ready to do something regarding the markets, and I'm talking about the equity markets here. That's not, I think, what they really intended, but that's the way it was interpreted. And now that it's back below that level, this market really looks like it's breaking back down again. You can make a case that this is a head and shoulders pattern, and that would measure out much lower, almost 8 points lower from this level here, which would give us a target of 135. I'm not putting a $135 target on this market, but I don't think it's unreasonable either. In a downtrend, there's nothing is unreasonable as far as a downside target. Just as picking a top is a very unlikely event for anyone to do in the market. So again, guilty till proven innocent. We've got a declining 50-day moving average. Defense wins the game, and that's how you got to be playing it right now. The semiconductors, I've been saying, are neutral in the daily time frame. They're starting to look even worse than neutral, though, because this 50-day moving average is acting as resistance in here. We've got the most important level of resistance up there, about $38.40. The 10-minute time frame, I said, was neutral too, but now it's breaking back down below that $37 level. So maybe we can get a little bit of a rally in here, but I think that rallies are going to continue to be sold. It's likely that in the next few sessions, and I don't know when, it's hard to tell when, but that we'll probably get a strong rally based on some kind of headline news. And the problem with downtrending markets is that we get these rallies sometimes, and the shorts come in and cover. A lot of hopeful bulls have been on the sidelines or who have cash, throw their money at the market thinking, hey, that's the end of it. But don't fall for it. If we do get such a rally, it's likely to be a very short-lived and very sharp. Use it as an opportunity to sell into if you still have long positions. The IWM, like I said, this 200-day moving average has been acting as resistance the last week and a half, and we've got a declining 50-day moving average. This market remains in big trouble. We've been looking at this longer-term trend line and the lows from late 2006 that area in here looks like the $74 level looks like it's likely to be tested once again. I thought maybe we get some support at 76.40, or that we needed to get more defensive if it broke below there. It did that late in the day as well. So now it looks to me that a test of the $74 level is inevitable and likely to come here in, I think, the probably relatively short period of time. The Nasdaq 100, this market continues to just deteriorate as well. We've got the 50-day moving average basically neutral now, but we've got a declining 10 and 20. That tells us we've got to be very defensive in this market environment. Lighter volume than we've seen over the average. This is a 20-day moving average of volume. It was lighter today, but than the average, but it was heavier than yesterday's attempted recovery, and the market did close down at new closing lows for this sell-off, and it also broke down below that $47 level that I was stressing as important yesterday. Yesterday I was saying that basically the $47 level is where I think this market could really unwind. It looks like this is an easy test coming right around the corner, and as I outlined yesterday, I think it's more likely that we'll get a move down towards this prior level of support, and that if that's tested, then why not go for the 200-day moving average? That's at about $45.30. So there still remains a lot of reasons to be very nervous about this market. Don't wait for other people to sell. Sell before everyone else does. Sit on the sidelines and wait. If you're not a short, if you don't have the short seller's mentality. I am holding a free online course this Thursday at 11:30 a.m. Eastern. You can go to my blog, alphatrendsblogspot.com, to check for more information on that. If you're watching this at YouTube, make sure you check out my blog each day.